Namaskar and good evening. Today we will look at a company called Bharat Wire Ropes. As always, I have taken into account its latest Q2 FY23 performance. Therefore, I am bringing it before you. Bharat Wire Ropes was acquired in 2010 by Mr. M.L. Mittal, current promoter cum managing director. The company is headquartered at Mumbai, Maharashtra. It has two manufacturing plants, one at Atgaon and another at Chalisgaon. Atgaon plant has a capacity of 6000 MTPA and Chalisgaon has a capacity of 66,000 MTPA. So Chalisgaon is the bigger of the two. Now Bharat Wire Ropes is a leading manufacturer of steel wires, steel wire ropes, slings, strands, etc. Thousands of varieties of products are there in that categories. The company has the capability of manufacturing ropes ranging from small 6 mm to 90 mm, 6 mm to 90 mm, and that is ropes. Steel wires 0.3 mm to 5.5 mm. So wide range of products are there. It is having lot of industrial applications like general engineering, aviation, fishing, elevators, cranes, material handling, onshore, offshore, oil exploration, ports, shipping and mining. Bharat Wire Ropes exports its products to over 50 countries, including developed countries like Australia, Middle East, Nepal, New Zealand, UK, US, Singapore, South Africa, Vietnam, and many more countries. 90% is export and 100% is domestic sales. It caters to government organizations, semi government organizations, private organizations, and MNCs. Now, let us take a look at the Q2 performance. Net sales in Q2 was 150 crores. Previous quarter 133 crores. Year ago quarter 94 crores. So year on year improvement in sales is 59%. Quarter on quarter improvement in sales is 13%. 59% year on year and 13% quarter on quarter, and it is impressive. It's good. Raw material cost also has increased from 63.9 crores to 82 crores. That is about 29% increase in raw material cost year on year, but reduction of minus 4% quarter on quarter. Year on year 28.7%, quarter on quarter minus 3.67% raw material. Anyway, raw material increase is proportionately much less compared to sales. Therefore, sales have increased handsomely. Net profit is 15.36 crores. Previous quarter 12.04 crores and year ago quarter hardly 1.07 crores, which means 1336% increase in net sales year on year and 28% quarter on quarter. Equity is 64.38. There has been a slight increase in that year on year 2.14% increase. Now basic EPS that follows. Net profit 2.4 crores. Previous quarter 1.89 crores and year ago quarter 0.17 crores. That is again 1,312% year on year and 29% quarter on quarter. You see, the sales have been improving steadily over a period of time. So September we have seen net sales are at 150 crores. It is up 58.4% year on year. But if you go to the previous quarter, that is June quarter, first quarter, net sales are 133 crores, which was up 70% year on year. Its previous quarter, March quarter, net sales 134.45. That was also up by 95% year on year. And year ago Q1, June 2021 quarter, 78 crores. That was also up by 65.46% year on year, which means consistently it has been improving its sales. Let us hope, therefore, that in future quarters also there will be increases like this. And 52-week high price is 138, low is 49. Volumes are reasonably good at 2,42,000. Trailing 12 months EPS is 5.93. Trailing 12 months EPS is 5.93. Price earning is 20. Not high, not low. Price to book is 1.71. It's okay. Face value is 10 rupees. Market cap is very low, 769 only. Book value per share is around 70. It's a strong performance. The stock has got a very good financial performance. Just now we have seen sales have been improving, profits have been improving, etc. Valuation is reasonable to somewhat expensive also, 20 price earning. Price momentum is a little sluggish. It's not increasing. It is currently 13.41% away from 52-week high and 142% away from 52-week low. So, it is very near to the 52-week high, which is good. Price momentum is now going up. Bullish momentum, but with all this, it is an underperformer to Nifty. It is down by 2.21% in 1 month, whereas Nifty has gone up by 4.85% during this period. CAGR, 3-year CAGR if you take, revenue has gone up by 19.4%, not bad. Operating profit has gone up by 49.3%, that is 3-year CAGR. Price to book ratio is below the industry median, there is no problem. PEG above the industry median. Profit growth is high in the industry. We have seen sales have gone up, profit also has gone up. Revenue growth is in the market, it is second, runner up. Operating profit margin is high in the industry. Shareholding pattern. The company's promoters have pledged a lot. 51% of their holdings is under pledge, and for all that they have redeemed unpledged 18.14% of the pledged shares during this last quarter. So they are making efforts to unpledge. Promoters have decreased their holdings to some extent from 36.96 to 36.81. Not much, but anyway they have decreased their holdings. Institutional investors have upped their holdings from 9.76% to 17.76%. Now, if you look at the price performance, that has not been bad at all. Year to date is 104% up, which means it was a multi-bagger. In 3 years, it was 291% up, then also it was a multi-bagger. If you look at its strengths, trailing 12 months EPS growth has been quite good. Annual EPS growth also has been strong. Good quarterly results, we have seen that right now sales have increased very well, profits have increased very well, more than 100%. Return on equity is very good. It is efficient in managing its assets, that is ROA has been improving during the last 2 years. Net profit and net profit margin have improved well in the latest quarterly results, earlier also. Quarterly net profit and net profit margin are good. Year on year also it is good. Annual net profits have been increasing during the last 2 years. We have seen that. See, every quarter there has been improvement in sales and sales and profits both. FIIs have been increasing their shareholding. That is also a good thing. Company is now decreasing their pledged shareholding. That pledge is coming down. Recent results are good. Price momentum only needs to improve a little. Companies' cash flows are a little dull. The promoters pledge rather, is still very high, 51%, after the latest 18% release. Now, if you look at the opportunities, last traded price is greater than resistance 3. So, last traded price is reasonably good. Highest recovery from 52-week low, highest volume, highest gains, etc. There are no threats. Now, compounded sales growth, trailing 12 months is 70%. Last 3 years is rather dismal at 20%. Compounded profit growth is 117% trailing 12 months, but earlier it was a little dismal. Stock price CAGR is 106% in 1 year. Earlier it was less. Return on equity is dismal. Equity is high, return on equity is a little low. So Bharat Wire Ropes is performing well, but it needs to perform much better, reduce its pledged shares, and see that on the equity, its return EPS is also high. Thank you for listening to me. Bharat Wire Ropes is good, but watch out for one more quarter and make your decisions. Thank you.